Tesla stock was the single biggest gainer out of the S&P 500 today. It was also the second highest volume stock on the S&P 500 today. We need to talk about Tesla, and could this be the start of a even bigger rally? We also need to discuss the fact that Russell 2000 basically collapsed today. I think you can read through to this as something bigger, and we will discuss it here in this video. We also have some pretty big economic data coming out tomorrow that I expect could move the markets pretty large. Let's go ahead and get into it. Hit the like button and subscribe to the channel if you are hearing my voice and you want to make more money and you want to reach financial freedom as quickly as possible. This is your place to be. We keep you informed and up to date in hopes that you make more money. Before we get into Tesla stock and whether or not a continued rally is to come, and let me tell you right now, it looks pretty good, and there's some things we need to acknowledge, but something happened today in the markets that is not a great sign. The Russell 2000 got obliterated. The Russell was down more than 2% today. The Nasdaq was actually slightly in the green. The S&P and the Dow were down about 0.25% apiece. This piece of news didn't get talked about all too much today, but could be one of the reasons why the Russell fell so much. And I want to break this down, what this means for the economy. So Saudi Arabia extended the voluntary cut of 1 million barrels per day until the end of the year. Russia also did the same thing. I think it's about 300,000 barrels. This is about 10% of Saudi Arabia's capacity that they are continuing to cut throughout the rest of this year. Now, what a lot of analysts have said about this today is this is a bad sign for the Chinese economy, that the Chinese economy must not be doing good. That's why Saudi Arabia is extending this cut, because there's just not enough demand out there to make it worthwhile to not continue to hold this cut. Because if Saudi Arabia does not continue to cut 1 million barrels per day, well, they could oversupply the markets with oil and drive down the price of oil. I mean, God forbid the price of gas were to go too low. This argument makes sense to me. China's economy is not doing well. That's why Saudi Arabia is continuing to cut 1 million barrels of oil per day. But the way the Russell 2000 got destroyed today, down 2.10%, makes me think that this is a broader fear move in the markets. Now, what is actually interesting about this is the Russell 2000 as well as the Dow did the worst today. The Dow was down over 0.5%, and the Nasdaq outperformed. This is very much what you would expect during a recession. Your Dow companies are very cyclically inclined to the economy itself. If the economy does not do it good itself, I mean, a lot of your Dow companies are not going to do well also. Same thing with the Russell 2000. If the economy does not do well, Russell 2000 stocks probably not going to do well either, or a vast majority of them will not. The Nasdaq, on the other hand, people see as a little more recession proof, and I think that's why the Nasdaq did better today, and the Russell and the Dow did so much worse today. If you take a look at this chart, this is the Flex Shares Credit Scored U.S. Corporate Bond Index Fund. Now, this is basically telling you corporate bond yields in a nutshell, right? Or even can show you when this chart is down, companies are not doing well. And you could see what happened during COVID, right? This thing plummeted and then bounced back as there was a lot of funny money. Companies were doing well. Look at what happened recently. Even today, you were down 0.37 on this ETF. A pretty big drop for an ETF that does not move that much. And you're on a downtrending kind of trend for the past couple of months now, and you're starting to get to a point where you're almost breaking out under this makeshift kind of support level, right? If we were to draw a line, I think it's pretty easy to see, so I don't think we even have to draw a line. But right about here is a level of support, if you will, for this corporate bond ETF. So you're starting to make a move down lower. This is not a great sign for corporate credit spreads. We did report on this a couple of days ago, and I think it's so important that we're going to talk about it again. This is the delinquency by type of debt from 2006 through 2023. And this is the worst thing that's happening right now, or worst sign for the economy that really nobody is talking about, and it's auto loans. So auto loan delinquency rates are at 3.6%. You have not been this high since 2010. During the peak of the global financial crisis, the auto loan delinquency rate was 4.4%. This is at a time where unemployment was at 10% in 2009. So you're at 3.8% unemployment. Now, why is this a problem? And if you were to kind of extrapolate that, you would be at an auto delinquency rate, if unemployment hit 10% today, of 8 to 9%. So you are substantially worse than the peak of the global financial crisis right now as far as auto loans. But exactly why auto loans is important. You could look at credit cards, you could look at consumer loans, all of that. That doesn't matter to me. I don't care about that nearly as much as I care about auto loans. Why? Because you need your car for work. You need your car to take your kid to school, to doctor's appointments, things of that nature. You don't go delinquent on your car unless you just absolutely cannot pay the bill. That's one of the things, as well as your house. You just don't default on that. Anyone can default on a consumer loan or a credit card. They give those out for basically nothing, right? They just give you lines of credit. But your auto loan, you just don't default on that. So I think this is a clear kind of glimpse into how the economy is actually doing. And it is not great. After today's fall in the markets, I have real questions on whether big money knows something that we do not. We are going to get some data coming out tomorrow. Maybe the data did get leaked. That is always a possibility, as you can see big moves in the markets before data comes out. And just know, a lot of the time people get tipped off on this data beforehand. So the data coming out tomorrow is at 10 a.m. Eastern Standard Time. You are going to get the ISM Services PMI. Now, this is a reading of the service activity in America. Anything above 50 is expandatory. Anything under 50 is contractionary. So we are expecting 52.5. Last month's reading was 52.7. On one hand, if the ISM services come in above 52.5, that's not great for that super core of inflation. That might mean the Fed really does need to keep rates higher for longer because you're still even expanding services. Not great, right? But if you come in under 50, then you're contracting, and that's not great as well. So I don't really know if there's a huge win-win outcome for tomorrow. Maybe just a lose-lose. We are also going to get ISM services employment, ISM service business activity, ISM services prices, and ISM new orders. Actually, what is usually a bigger impact to the markets is this one, ISM services prices, because this is more aligned with kind of price increases or even drops. And you're expecting 56.4. And this has kind of been on a move down recently. You kind of went higher a little bit over the past month or so. Prices paid did go up, but you're down a lot from what you've seen last year at this same time. So you want to see this continue to trend down, and that could be a big one as far as a market moving event for tomorrow, as well as new orders. Obviously, that's aligned with the economy as well. If you're not seeing as many new orders, that's not great. You're expecting 54 here. Last month's reading was 55. Now, basically, across the board, you are expecting the ISM services PMI, all of these separate little data points as well, to all come in lower than what you've seen for last month. We are also going to get the Fed Beige Book at 2 p.m. This is a report from all the Fed districts on how the economy is doing in their district. So you're going to get specific clarity on a lot of different things, and this comes out at 2 p.m. It does have the ability to move the markets, but it's usually something the markets look past. So while it's hard to exactly figure out why the Russell got destroyed today, and the Nasdaq did so well, the Dow was obviously down about 0.5%, S&P down close to 0.5% as well. It's hard to pinpoint one specific reason for this. You could also say that bond yields rising today was also not great. The 10-year and the 2-year Treasury rose about 10 basis points apiece, so that's kind of going back up after we have seen a recent drop in these yields. I don't think that is why the Russell sold off 2% though. You're going to hear commentary from individuals on Wall Street that are going to sit here and say the 10 and 2-year Treasuries going up 10 basis points today caused the Russell to sell off 2%. No, it didn't. Don't be fooled there. The Russell sold off what looks like to me on fears of a global recession, or at least a recession in the US as well. That's the bottom line conclusion to this. So you just want to be a little bit careful out there. And markets, they're obviously going to be volatile in September. Historically, September is a very weak period for the markets, but history is kind of on our side. If the S&P 500 is up 10% or more heading into September, about 80% of the time, the markets are actually higher in September. And if they are higher in September or lower in September for that matter, the markets always end higher than 10% by the end of the year. At least that's what the data has told us out of any other period in time where markets have been up double digits in any given year. But then again, you could also argue that not too many times are the markets up more than 10% for the first 8 months of a year when you're facing an imminent recession, and markets are just flat out ignoring some big warning signs out there, like auto delinquencies for that matter. Let me know down below in the comment section if there is something I am missing in this whole equation for today. I would love to hear your input as well. Let me know what you think about this also. As we previously mentioned, Tesla stock was the biggest gainer on the S&P 500 today. Now, if you live under a rock or maybe you don't follow the channel every single day, well, let me explain exactly why that is. Markets sold Tesla stock on Friday, last Friday, 5%. You were 5% negative, one of the worst performing stocks in the S&P 500. Well, that was because of algorithms. Algorithms were selling Tesla stock because Tesla cut the price of the Model S and the Model X by about 20%, while also cutting the price of FSD. But what Tesla also did is they raised the price of the new Model 3 on average 8%. In China, they raised the price by 12% compared to the prior pricing of the Model 3. Lowering the price of FSD also will increase, presumably, the take rate, which these things have a positive effect on margins. The S and X only account for 4% of the delivery volumes we have seen so far this year. The Model 3 is around 29%. FSD is at a 10% give or take rate. If that just increases a little bit, you're going to be, doing much better. So once humans returned to the office today, once more people digested this information, they said, hey, this is a big positive. Now, the other news that you got today is there was about 12,000 vehicle registrations last week in China for Tesla. That was great news, as well as the rest of Europe. You're breaking some records in certain countries. Not to mention that, just the whole Eurozone in general, seeing about 34,000 vehicle registrations for the month of August. This was a lot higher than what some people were expecting. This was great news. and basically correcting that sell-off that you seen on Friday. Now, I do think Tesla stock could continue to do well over the next coming months, and I think this could just be the start of a larger rally. But you have to remember, if the markets crash, go through a correction, a period of weakness, or anything in between that spectrum, Tesla stock not necessarily going to do well. It usually does worse than the broader markets during bad times. It usually does better than the markets during good times. And that's exactly what I would still expect going forward. On the charts, there is 3 things that kind of lead me to believe maybe we will see a larger move. One of them is the 50-day moving average. This has been a major level of resistance, and today you did close regular trading above the 50-day moving average. This has not happened for the last 4 trading days. You have found resistance here, and you have not closed above it. And today you actually did by just a little bit. Tesla stock closed at $254.49 per share. The 50-day moving average is at $256.24 per share. So about 25 cents did you close above the 50-day moving average. This was great, and this is a great sign. Now, the RSI, that's at 55.86. So there's definitely room for this to go higher, but I think the biggest telltale of all is the MACD. Now, the MACD line just went positive today, and that is at 0.01 positive. And usually when you get a break of the MACD going from really negative to breaking positive, you tend to get larger rallies, right? The last time this happened was back here on May 4th. Of 2023. And what happened? Well, Tesla stock traded sideways for a couple of days. It even went lower for 2 days in here. And then you were off to the races during this face ripper rally. Went from $165 per share all the way to about $300 per share within the preceding about 2 months or so. So last time this happened, and every time this has happened, you have always seen a rally after the break from being negative on the MACD to positive on the MACD. So I think that's one of the strongest signs that we have right now for Tesla, that Tesla's probably going to do well over the next coming weeks and months. The biggest thing that I would actually point to, though, is the release of the Cybertruck. We have seen really good demand for the Model 3, and that's all fine and that's all dandy, but that is still just a sedan. It's kind of the same segment of business Tesla's been in the whole time, cars. The Cybertruck is going to unleash a brand new category to Tesla's business, and that is trucks. Now, there's about 2 million pre-orders for the Cybertruck, so it looks like there's a lot of demand. There's more demand than Tesla can fill for years to come for the Cybertruck. Now, we don't have final pricing. We don't know exactly when this is going to come. A lot of us estimate by the end of September, we could probably get a delivery event for the Cybertruck, and then starting in October, November, actually start delivering Cybertrucks to customers. We know they are producing the Cybertruck, so hopefully that leads to quite a few deliveries right from the start. And a lot of these early reservation holders of the Cybertruck, well, they also bought FSD as well, so that should help margins in the short term, like the next couple of quarters or so. Now, Wall Street is already pricing Tesla stock as if the US economy is going into a recession. And why I say that is because Wall Street is expecting 27% delivery growth for next year. In a year in which you're going to get a larger launch of the refresh Model 3, hopefully in the US as well. I'm waiting to get my hands on one, and then an eventual Cybertruck, but the wait time is like 5 years, so that could be a little while. But you have 2 massive launches. One of them still has to come to the US, and the Cybertruck just needs to happen everywhere. So 2 major launches in 2024, and Wall Street is expecting 27% delivery growth, 29% EPS growth, even with all of the investments that Tesla is currently making, expanding factories, building Giga Mexico, building new showrooms, the supercharger network, all of these things that Tesla is working on. I doubt margins are going to continue to fall, and Tesla cannot beat 29% EPS growth. That sounds like very recessionary numbers to me, considering Tesla has grown about 85% EPS as well as delivery growth within the last couple of years or so. So the good news is, even if we did go into a recession, it's not like Tesla really has high hopes or expectations from Wall Street. Here is what Dan Ives said about Tesla stock just a couple of days ago.
Look, Brian, it's a great point. You always have a great pulse on what's happening out there. But I believe it's in 1995, not 1999, 2000. In other words, I think there's really started the internet type vibe that we see in terms of spending, maybe similar to 2007 launch of the iPhone. I think the difference now is that the second, third, fourth derivative, this tidal wave of spend, it's just starting. NVIDIA is the first one, but this is something we're going to see over the next 12, 18, 24 months. And that's why, to us, when it comes to tech, I mean, we've been really pounding the table here because I think a lot of these names going into next year, I think it's going to be really a golden opportunity in what I view as a 3-year bull market for tech.
Well, you made a lot of market bulls out there happy with this note and coming on tonight, Dan. I want to pivot, though, to Tesla if we can. Last time you were on Last Call, you had this to say about Tesla.
We remain firmly bullish. I think as we go into the rest of the year, demand will be firm going into next year, especially with Cybertruck. I think it's a table pounder at these levels.
Well, today, Tesla shares, Dan, they fell 5%. One day doth not a trend make, but it follows reports of more price cuts in China on the S and the X. The price of the Model 3 actually went up a bit. Based on that, does your Tesla positioning change at all?
It does. It's actually more bullish. Because ultimately, when it comes to Model 3 refresh, that's the key. In terms of S and X, cuts there, I view that as table stakes. We're focused on Model 3. I look at Model Y. To me, in China, there's actually been, I think, improvement in demand relative to where I think many thought. And when I look at the overall Tesla story, 1.8, 1.9 million units, I continue to use the bogey they're going to hit. Margins, yeah, we've seen the compression, but I think that troughs the next quarter or two. So I'm actually more bullish. We'd be buyers on this knee-jerk reaction.
So in my personal opinion, Tesla stock should easily be able to break back into that $300 range heading into the end of this year. Ultimately, maybe make your way to all-time highs in 2024 as long as things go as planned, and Elon usually underestimates the company itself. So maybe Tesla does come in with over 2 million deliveries, and 2024 could be even better than that. So we'll ultimately see. There's a lot of different outcomes that could be at play here, but Tesla stock looks pretty dang attractive. And I think even on a day like today, where you've seen so much weakness in the markets, but Tesla still massively outperformed, is going to show exactly that. So I do think a larger rally is to come with Tesla, but also keep in mind the caveat here. If the markets do crash, if we go through a correction or anything in between, if the US goes into recession and that causes fear and panic in the markets, Tesla stock, I wouldn't expect to do well in that moment. But over the next coming months, 6 to 12 months specifically, things should be really good. And I think if we're going to get some weakness here, you're probably going to get the weakness towards the end of the year. October, November, December, those could be pretty shaky times for the markets, considering student loan repayments start on October 1st. And you should by then be seeing the full effects of the Fed rate hikes and really slowing the economy. We're starting to see that now. Usually when it starts, it does progress pretty quickly. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let me know what you think about all of this information, and give me your opinions on Tesla stock right now down below in the comment section. My name is Michael Tyler. Enjoy the rest of your day or night, and I will see you in the next one.